Alright guys, happy Saturday. Greetings from a chilly Massachusetts. And I've got a busy morning ahead here, so I'm going to bang out the video, send it over in the chat, and get y'all ready for the week ahead. And I think the theme into the week ahead will be, you want to practice a lot of patience on the swing side. I think both on longs and potentially on the short side. If we look at the rankings, right, and don't forget the sheet does not lie, S&P's -4. QQQ -4, IWM -7, Dow Jones -7. That's a pretty big shift in the favor of the Bears. Really going back even as far as 5-6 days ago. I think it was Tuesday of last week, or this week. QQQ had a 75 out of 75. Really good daily squeeze, bunch of buy signals. Good reminder things can quickly change. Then the sectors. For the most part, the bulk of them are negative. Energy is the worst, and then healthcare, XLP, real estate, materials, XLU. My good friend, the SMH, -15. The ARC, a -8. A lot of red here, folks. And then the big boys, Amazon after earnings, looking pretty good. Netflix, Google, Tesla, TSM, Nvidia. They hold up all right here, and then Meta's a little neutral. Broadcom, Apple, Microsoft, leaving a bit to be desired. But keeping things as simple as possible. S&P's a -4, QQQ a -4. The combined index score being negative. I can't wake up Monday in a big rush to go buy calls. Being that we're still above a few key levels of support, a little tough to want to wake up Monday and get short. Unless, of course, we are below the key levels. So we'll do the QQQ first. And again, pretty big drop-off from even Monday, Tuesday of this week. All right, so we got this daily squeeze setting up, and momentum shifts back below zero. Never a good thing there for the bulls. Momentum break, you have two closes back below that 21 EMA. Looking at our lower time frames, 4-hour chart is neutral, the 2-hour is neutral. Hourly bearish, 30-minute, 15-minute neutral. When you take that daily squeeze and you want to call for a push towards the upside, basic stuff. You want price above your 21 EMA. And then you're looking for 15-minute buy signals, 30-minute, hourly, 4-hour. We ain't got that for now. From the ground up, things might lean a little bit more in the favor of the Bears, especially with an hourly sell signal. Below that 490 and above that, what do we got? 481-ish. 21 EMA, 50 SMA. If we're in that box, I think calling for direction on swing trades might not be the easiest. They'll flush it, they'll pop it, they'll reject it. In terms of our next big round of swing decisions, couple closes back above that 21, handful of lower time frame buy signals, then they might have a chance to still take that daily squeeze, try to push the thing towards brand new all-time highs. They go breaking that daily 50, and we are just riddled with lower time frame sell signals. I think the squeeze breaks short, and you're looking to buy some puts. Under that 21 EMA, above that 50 SMA, I think you're better off day trading. We're closer towards the bottom end of that range. QQQ prints a 15-minute, 30-minute squeeze and a buy signal. Yeah, play that for a push back towards that 21. Or the opposite, 15-minute, 30-minute squeeze with a sell signal. Try to short it down towards that daily 50. Swing trading, I think, gets a lot easier on the other side of 490 and the other side of 481-ish. S&Ps, I think, are stuck in a pretty similar spot here. No daily squeeze, but momentum shifts below zero. There we go. Momentum break, and for now they hold that daily 50. The key 5,700 strike, and they can't quite get back above that 5,800. In between the two, just day trade it. 15-minute, 30-minute hourly squeezes. They go getting one, maybe two closes back above that 58. They might want to go for the big 59. A couple closes below the 5,700. Might be a flush back down to 56. And then don't forget, we got the election, we got the FOMC, so again, for swing trades, I think we're lacking clarity. And not only are we lacking clarity, we're doing that coming up on potentially a few big catalysts. All signs point towards day trading. So there's your QQQ, there is your S&Ps. They have looked better. And then a quick look here at the Russell. The good old small crappers, and yeah, what do you do with that? My answer is not too much. And then I would have to tell you the same thing here about the Dow. However, Monday might be a little interesting here for the Dow. They got some news after the close on Friday, and NVIDIA, which you might have heard of, NVIDIA is going to replace Intel as a holding in the Dow. We'll see where things open Monday. In the after hours, looking like NVIDIA's gapping back up towards 140-ish. I think in terms of weekly squeezes, along with Amazon and Apple, this might be one of the better ones in the market. Earnings coming up on the 20th of November. Can they take that weekly squeeze and break it out and, they're gunning towards $1.50 before earnings? That I'm not too sure of, but putting earnings aside, at any point that weekly squeeze fires long, I think NVIDIA's headed towards 155 to 160. Might not be next week, might not be after earnings, might not be ever, but I do think that could be a path forward here, so going to keep an eye on that one on Monday for a gap up. And then jumping over to Apple after earnings, it does maintain a really good weekly squeeze. The key here, of course, is they can't let it go below 220. 3 weeks into an A-plus weekly squeeze. Really good structure, really good trend, buy signal, perfect score. The problem for now, of course, is, the weekly chart's got the perfect 15. Drop down to a daily time frame, you got a big old 0. I can't do too much of that weekly squeeze to the buy side until my daily chart improves, my 4-hour, 2-hour, hourly. Apple got a lot of work to do here in the short term. So I'm not going to be in a big rush to buy calls off of that weekly squeeze. Although at some point, if I get a buy trigger, I would love to do that near that 220. And then Amazon after earnings. Good action, good gap up. I'm watching the weekly squeeze here. Now we are going to be 23 weeks in. When we open up on Monday, 23 weeks, that is a pretty lengthy weekly squeeze. The translation of that is we are building up a crap load of energy. They pop it on Friday right back into that key 200. They might be able to poke their head above it. I don't think they get that bigger breakout in the push towards 220 and change. If they can't take the MACD, pull that back above 0. Without that positive shift in momentum, it's tough to get that breakout and get that follow through. And for the better part of that weekly squeeze, you're hanging out here with negative momentum. At no point do they really break the structure, which would usually imply if they do cross it positive, Amazon might be off to the races. Unless the QQQ falls apart, that could be a good buy the dip candidate. You got NVIDIA, you got Apple, you have Amazon, and then back to the rankings here. Microsoft's not one of my favorites. Broadcom, Meta. I have to put the QQQ first. The thing is, if Monday morning QQQ is just dumping below a daily 50 SMA, I think it takes everything with it. They get a close back above the daily 21, then I think everything can bounce. If I am going to get long, it's not going to be in a Microsoft or a Broadcom. It'd be in a Amazon, Netflix, Google. The few names that hold up decently. So Google here. Again, put the QQQ, put the S&Ps first. If you can get buy triggers on the indices, then I think Google here might be all right. For quite a while, you've got resistance around that 170. They finally pop it through on earnings. The key now, can previous resistance turn into brand new support? They hold the line there at $1.70. They trigger a 15-minute, 30-minute hourly buy signal, and then the QQQ is improving. Might not be a bad spot to buy the dip. If anything, play for a pop back into $1.75. Depending on the QQQ, may be a little higher. No, but Google in comparison to Microsoft. If I'm buying anything on Monday, got to put that Google first. And then one more for you would be Tesla. Notice the last 3 times at Tesla, or the last 2 times rather, you get a big move, you trigger a daily buy signal, then you get the back test. First back test, they totally drop the ball. Breaking structure, breaking momentum, they lose a buy signal. They pump it again, they go for round 2. Another round of buy signals. First back test, and it all kind of falls apart. Gap it up after earnings, trigger another round of daily buy signals. On this back test, if they can hold that 240-ish, might be a spot for a turn back towards the upside. So I'm going to keep an eye on, the Nvidias, Amazons, Googles, Teslas. 90% of my focus will be S&Ps and QQQ. If they can't get out of the box, if I am buying a Tesla, buying a Google, I'm thinking much more short term. If not a day trade, maybe a spot where I'm taking an end of day 15-minute squeeze, buying a few calls, looking for a little follow through at the open. Before I can take a Tesla, take an Nvidia, and call for that multi-day, multi-week, kind of swing trade, got to get QQQ out of the box, got to get the S&Ps out of the box. And then, not just the big tech names, big semiconductors. When the indexes are stuck, that can impact your XLY names, communications, financials, the whole kit and caboodle. Be patient, mark up your key levels, daily 21, daily 50 on the S&Ps and the QQQ. In that box, take your clarity, and I think take your plate of opportunity down from a 1 hour, 30-minute, 15-minute, 5-minute. Don't call for a home run. Don't call for non-stop strength, non-stop weakness. Find your spot. Take yourself a quick base hit. And then we get to breaking out. You take it from there. All right, y'all. Easy peasy. Nice and straightforward. As always, thank you for watching. Thank you for being a part of the group. Have a great weekend. And I'll see you bright and early on Monday. Adios.